private players started operation in telecom sector, we have seen that BSNL is collapsed. When private players started operations in airline business, we have seen that Air India collapsed. But now we are talking about one company which is a dominant market player even after entrance of private players for last 20 years. We are talking about LIC of India. Hello friends, I welcome you all to my YouTube channel. I am your host CA Rahul Bajaj. So we will be discussing some of the key important points for upcoming LIC IPO. Let's understand this in three parts. We will understand industry and business, we will understand the financial statement, and we will understand the valuation. Why we are dividing it into three? Because industry and business is very difficult to understand. It is the financial sector. Further, understanding of the financial statement of insurance company need your expertise knowledge. It's not as simple as normal financial statement. You have to understand different terms, terminologies in insurance. There are some terms like net return premium, net earned premium, solvency ratio, etc. Then we will understand the valuation perspective of the company. First, we will understand that why insurance is required. So we have seen that nowadays nuclear family concept is there. Everyone is having limited dependency on single person who is earning in the family, or due to urbanization, nuclear family concept has gone up, and there is dependency on a single person who is earning. What if something goes wrong to him? Then for that protection, the insurance company is there. In India, earlier, there was a joint family concept. So in joint family, the family which used to run together, earn together, stay together. But now what happens? The family is divided into nuclear family. In old times, even if by any chance, if someone dies, that will not affect the financial condition of particular family. But nowadays, scenario is changed. So this is where insurance is required. So we will understand, first of all, insurance and perspective of the insurance industry. We will understand how insurance company makes money. Insurance company takes premium from you. That premium that they invest into somewhere, and they will earn money, and they will return you when it is due or required, or when their obligation arises. So they have float available with them. They are holding that money, but they are not the owner of that money. So that float is available with them. That float they invest into market, and as per the guidelines of IRDA, in various securities, debt, equity, and multiple things. So by investing in that, they make a money, and out of that they repay. So in case of life insurance, generally the claim arises after 50-20 years. Generally, the policy matures after 15-20 years. There are certain policies which are like money back and everything. Those give you money back after every 5 years. So insurance company is holding your money for a long period without any commitment. So they have a lot of opportunity to invest money and make money out of it. So whatever premium you pay, that premium is calculated for the particular period, and that earned premium, there is a claim, there is an expense, and there is a commission. Three major expenses in insurance company. Claim, whenever there are claims, that is there. Also, there are calculation methods for claims based on actuarial valuation. Some provisioning is done. So we have to understand from that point of view. So checking profitability is not only criteria for valuing any insurance company. We will see now insurance industry. So in India, there are 24 players in insurance industry. LIC is the sole PSU, and the industry size is 6.2 trillion. On total premium basis. You can Google it out if you are not aware of trillion. Industry premium has grown by 11% CAGR in last 5 years, and there is an expectation that the total premium grow by 11 to 14%. Growth drivers to insurance industry, as in last slide we have said, there is chance that insurance sector will grow by 11 to 14%. So we'll understand that what are the favorable factors, those are helping industries to grow. So now we will understand the population of our country. So if we see for 2011, 9% of the population was above 60, rest all the population was below 60. For 2021, 10%, for 2025, 11%, and 2030, 13% is above 60. So major working class people are there. If we see by age group, there is a lot of opportunity for insurance company. So urbanization, now I have told that urbanization is part for growing the insurance sector. If we see the urbanization, there is development, infrastructure development, job creation, and everything for job purpose. Many people come to, if we compare in 1950, there was 17% of population which was in cities or urban areas, and in 2018 it is 34%, and maybe 2025 it is 37%. So nuclear family concept I have already. Increase in GDP per capita income. So we are here seeing nominal GDP in trillion, so which is expected to grow at 10% CAGR. So that is also an important factor. So if there is increase in income per capita income, so their discretionary power increases. But whenever someone earns or start earning, he will look for the security, and for security purpose he will invest in insurance. See rising middle India population to propel economic growth. If we come earlier years for 2012, 17, 22, and 30, if we see it, population earning below 2 lakhs is decreasing over a period of time. Population earning above 2 lakhs to 10 lakhs is increasing, and above 10 lakhs there is also increase. So overall there is an increase in income. If there is an increase in income, so there will be growth opportunity for the sector. Financial penetration that rise to increase in awareness of financial product. Currently, if we see the saving habits, around 70%, okay, 69% in financial year 12, it was in saving in physical assets, including gold and silver. But now the trend has changed. So over a period of time, so earlier it was 31% in financial assets. Now it is around 41%. In 10 years, it has increased by 10%. So you can see that there is change in habit of saving. People are preferring to invest in financial assets. So financial assets includes mutual fund, bank, saving in bank accounts, insurance, trend in gross financial savings over the years. So these amounts are in billion. So there is 12% CAGR growth in saving. You can see it. So there is increase in saving. So there is also chance in increase in financial instruments, saving in financial assets. So increase in income will result into increase in saving in financial asset. Here we can see in financial year, it is 16.8%, it is 15%, and it is 19.4%. So the saving habits are increasing. there is increase in saving, and there is increase in percentage of financial asset. In that percent, also there is increase in investment in insurance sector. So this is also part of growth opportunity of insurance. Digitization. So next, what we can say next growth cycle is based on digitization. If we see, everyone is having mobile phones, smartphones, everyone is working on internet and having unlimited access to all the information. If we see channel mix, so whatever the business is coming to this LIC, SBI Life, HDFC, you can see there is a growth in percentage. So if we see due to digitization, there is a significant growth. So you can see the percentage of direct business that is coming from due to aggregators. There are multiple aggregators. I cannot take the names, but you can see it online. So you can compare policies over there, and that way digitization is helping insurance sector, bringing awareness. That is also reducing the cost, and that is helping in overall growth opportunity. As we have seen in last slide, there is internet penetration. So urban area there is more growth, and rural area there is also significant growth internet penetration. We can see the UPI usage data. In 2018, 91 banks were live on UPI. In 2021, if we see, it is 259. Here, if we see that number of transactions, 178 million. Here, the amount is number of transactions, 3,654 million. The amount of transaction in billion. So these are the amounts. So there is growth in use of UPI. On UPI also, you can make the payments of insurance company. There is no need to visit the branch office, satellite office. So there will be also reduction in cost over a period of time due to digitization. So the working culture due to digitization, that will change. Maybe there will be smaller size branches or satellite offices that will be there to solve the problem. So we'll see the LIC has 8 zonal offices, 113 divisional offices, 4,700 branches, including satellite and mini offices. New business premium for LIC for fiscal year 2021 was over 1.8 trillion, which is representing 66% of aggregate industry. 2 out of 3 policies around. So type of insurance product. So here detailed insurance product, business, individual, group, and the LIC's contribution in that has been calculated. So this way, this information can be analyzed, and you can calculate the share. That is easily available. Strong growth in premium for the life insurance company. So we have seen the growth factor. So obviously there can be a growth around 11 to 14%. This is premium per capita income and penetration. You can see there is a lot of opportunity for the industry to penetrate. We are seeing Singapore, Taiwan, UK, Japan, South Korea, Italy, these countries. So there is a lot of opportunities in this sector. We also need to understand that key success factor in insurance companies. So which company which will be more successful. So those who are honoring the claims. So good track record of servicing the customer, offering differentiated products and competitive pricing, strong distribution networks like agent network, efficient underwriting and cost management. So most of the things now due to digitization has eased out. There is reduction in cost of underwriting and everything. Taking new approaches to the customer engagement, engaging customer with a different initiative. Now we will understand the market share of largest insurance as a percentage of total life insurance premium. Country UK, China, Japan, India. Market share is generally around 8 to 20%. You can see, but only in case of LIC of India it is 71%. Now you can see here market share is 64%. LIC's global ranking, we will understand LIC ranks 5th in terms of net premium earned, who are the top 4: AXA SA, Ping An Insurance, Alliance SE, and China Life Insurance Company. So LIC ranks in number 5, at number 5. So global comparison we will do. Players are listed according to the AUM, asset under management. So what is asset under management in case of insurance? So whatever the amount of premium they have collected and they have invested somewhere, maybe in government security, debt, equity. So all the combined value of that is called as AUM. So if we see LIC is at here, LIC's AUM is growing at 8%. LIC's net premium is growing at net earned premium is growing at 6%. LIC's PAT is growing at 5%. Basic problem with analyzing LIC is there is no one near to LIC in domestic market. So you also have to see the global competition, global market, how the companies are for ROE as compared to global players. So return on equity, here we can see that. So return on equity was 375% in 2016 and 82% in 2020. Maybe due to COVID claims, there will be a reduction in profit. So again, we will see the market share. So market shares of LIC in group policies, new business premium 77%, and individual policies it is 44%. So overall around LIC plus 5 contributes almost 90% of the total market shares, and the rest 16 companies have only 10% of market. Operating expenses, we'll see that LIC is stable in the business, and LIC's operating expenses is 8.7% of the premium, whereas if you see that private player it is 12.6%. Generally in case of life insurance, the claims or maturity comes after 15 years, 20 years, 25 years. So private players started operating in 2002, 2001 that way. So they have just now completed 15, 16 years. Some of them maybe started, but there was no big business in initial year. Now here, the performance of private player will also be stabilized over a period because their normal claims, their normal maturity will also come now. Again, in cost matter, LIC is market dominant. It has 14.2% as compared to industry, which is 15%, and private players 16.9%. So total cost as percentage to premium is low, and this cost may be further affected or lowered due to digitization. The commission expense, the underwriting expense, the settlement expenses, all those are coming down due to digitization. So maybe all the players in the industry is trying to tap digital platform to push sales as well as improve the operational efficiency. Number of products are the key success factor. So LIC offers 45 policies, whereas it has a large number of products as compared to other insurance. Reinsurance ceded. So these are the terms of insurance company. Reinsurance ceded means the business we have accepted is given to somebody else due to risk involved. in it. So if maybe, for example, if LIC is getting 200 crores of some insured business and LIC does not want to take the entire risk of 200 crores. So part of this or entire of this, LIC will cede to some another company, and while ceding, they will get the commission. So the risk is transferred, commission is earned, and business is written in our books. But business is written, but premium is gone to some other party. So these are the terms. So understanding the insurance company's terminology is very important before we are analyzing any company. Premium ceded as percentage. See, LIC's premium ceded percentage is very low. That means LIC is having enough capacity. Maybe LIC is not taking such a business which is more riskier, or they want to value, or LIC is having that capacity that it can absorb a big number of claims. So if you see here, out of total percentage of business ceded, reinsurance ceded, only 9 or 10% of the business ceded is done by LIC, 90% is done by other players. You must be thinking, why do other players do that? Because they have to reduce their risk based on the particular claim. So if somebody is buying a group insurance of some big giant like Reliance and everything, so there may be a chance if a large number of claims come at a time, there is a risk on the company. So that way also they reduce the risk by ceding the business. EPS and solvency ratio. So solvency ratio, very important. Solvency ratio is defined as the excess asset over its liability. And generally IRDA prescribes solvency ratio. Your solvency ratio should be always more than 1.5 times. So earning per share, you can see here at 4 rupees of LIC, whereas SBI 14, 6, 7, 2, 29. That way also solvency ratios. Generally, these private players who have started their operation for last 15-20 years, so they are stabilizing their business now, because the major claims and maturity will follow now or follow in upcoming years. As in case of general insurance company, the claims can come in same years. If not received, that can be money of the insurance company, and they will again invest that money to grow further the organization. But in case of life insurance company, the maturity comes after 15 years, 20 years, 25 years. So that way the pool is built, and maybe in initial phases of operations, that much of amount of claims have not yet received. That can be one of the factors. Here one has gone. So we will also have to see the claim settlement ratio. Those who are settling the claims better are better from buyer's point of view. So anybody who is buying insurance policy will always see who is settling the correct number of claims or a maximum number of claims. That can be one of the parameters. So this is one of the key success metrics in the insurance. So out of maturity of total claims, 87% of the claims is being paid by LIC, because LIC is in existence from 1956. So it has settled all business, so that there is this can be a routine activity, because after 15 years, 20 years, 25 years, generally the policies get matured. So LIC is operating more than 50 years. So that cycle is there, and that cycle is a stable cycle. But maybe in case of private players, that is not there. Settlement or maturity claims are compared to lower. Also the market size, the business written by the LIC is much higher size. So these are the two factors that can be the reason for market share in total claims paid. So LIC's return on equity is 404% for financial year 19, which was a normal period, 20, which was affected by COVID, 21, which is also affected by the COVID. So we can compare in all other factors. LIC's ROE is much higher as compared to other insurers. Operating expenses, just by seeing the numbers, we cannot understand that. We have to analyze what percentage they are operating. Premium, based on the premium. So expense ratio, which is also guided by the IRDA, we will understand in our next. Thank you friends for actively listening this video. If you have liked this video, please like, share and subscribe. Also write in comment box if you understand any terms that I have missed to explain. Also, if you want to see the next part of this video, please write comments on my video so that I will understand you are liking my video. Thanks a lot. Thank you very much.